This is Sky News, live from the city with a special programme on the war in Ukraine and what it means for the global economy. Coming up this hour, under attack, the financial as well as humanitarian damage in Ukraine. We'll hear from business leaders there about the economic disaster and what will be needed to help the country rebuild. Volatility on the markets continues amid the uncertainty, with the price of oil falling below $100 a barrel for the first time in a fortnight. Russia hit with more sanctions, including extra tariffs on vodka, in the latest push to help isolate the country. Plus, rebuilding Ukraine, we'll hear from the UK-based entrepreneurs trying to help their home country. Good evening. What has happened during the last 20 days in Ukraine has shocked the world. Vladimir Putin's war has seen cities bombarded, hundreds of civilians killed, and 3 million people flee the country. As well as the humanitarian cost, there is, of course, a huge economic cost to Ukraine, impossible to estimate at the moment. But the scale of the war means the effects are also being felt right across the globe. Over the next hour, I'll be speaking to analysts, economists and business people to find out what the war in Ukraine means for the global economy and whether it could snuff out the post-pandemic recovery. But first to Ukraine itself. A little earlier, I spoke to Sergei Sivkach. He's the executive director of Ukraine Invest. He spoke to me from the capital, Kiev, about the damage being done by the Russians in Ukraine.
They did a great damage to Ukrainian economy. And they did great damage also to regional and to global economy. I will tell you one example. Ukraine is a big agricultural country. We are 42 million people in the center of Europe, but we feed more than 150 million people worldwide. Last year, we managed to harvest more than 85 million tons of grain crops. This year, if we will not manage to do sowing works, and they have to start now, you can imagine what's going to happen. And about half of our harvest was exported to all countries throughout the world. So this could be a humanitarian crisis that will affect not only Ukraine, but the whole world. It is very important now to stop this war. You know, our president, our politicians, our people, they scream out loud, saying, asking for a no-fly zone, and this is still not happening. So this will have a very serious effect on Ukraine region and the whole globe.
Apart from the issue over the no-fly zone, are there any other sanctions that the West could be applying to Russia?
Well, we have seen sanctions. We have seen many sanctions, but some of them, like SWIFT disconnection, for example, it's not a full disconnection. So some banks, some intermediaries, they still use SWIFT. So Ukraine definitely wants to see proper sanctions, solid sanctions that will have immediate effect on Russia. There is no room for half measures at the moment.
Obviously, in your role at Ukraine Invest, you speak to partners from all over the world. What have you heard from investors like the Chinese, who are obviously being quite ambivalent in terms of how they're playing this?
Well, we didn't see many Chinese investments in Ukraine. We have been approached by Chinese investors many times, but we didn't see real investments in Ukrainian economy so far. At the moment, we can only say that they probably still interested, but obviously, we do not talk to investors right now about investments. We talk to investors about the ways we can support them. One of the key issues right now is support in terms of relocation from affected regions to Western Ukraine. We are 24/7 in touch with investors, Ukrainian and foreign investors, when we are helping them to do so. And we will need to have some solid analog of Marshall Plan in Ukraine. The plan that was created by United States for European countries after the Second World War. And this will have to be very solid, pragmatic, and a very well-planned way to recover Ukrainian economy.
It will also require a vast amount of money. Is it possible, do you think, to put a figure on the kind of money that might be needed in reconstruction?
Well, at the moment, our officials talk about negative effects at level of about 120 billion US dollars. But these are very, preliminary assessments, and I'm sure that the figure will be much higher.
And in terms of the kind of things that would be needed, presumably restoring damaged infrastructure will be the priority.
Damaged infrastructure, bridges, airports, because airports were targets number one for Russians. Also, residential houses. Only in Kharkiv city, the city that is near the Russian border, already more than 600 residential buildings destroyed. 600. And I'm talking about 9-story, 12-story buildings, So we cannot even calculate appropriately now how much money we will need. In Kiev, we do not need alarm anymore, unfortunately, because every morning, 5 a.m. sharp, they send missiles, and missiles are sent to hit residential houses, not military targets. Just next to me, 700 meters away, the residential house was hit yesterday at 5 a.m. Today, same story in Kiev. At least 5 civilians were dead at 5 a.m. today. So it's a very important topic, to discuss in no-fly zone. Our president also said if there is no possibility to introduce a full-scale no-fly zone, then Ukraine needs to receive anti-missile systems.
Well, let's have a look at how the global markets have fared today. And it's fair to say that equity markets in the Asia-Pacific region had a pretty torrid session following a surge of COVID cases in China and Hong Kong, concerns over whether the war in Ukraine could spark fresh trade tensions between the US and China. The Nikkei in Tokyo managed to eke out a modest gain. Sydney was more or less unchanged. But in Shanghai and Mumbai, there were big falls. In Shanghai, the Shanghai Composite actually fell by nearly 5%, as you can see there. Meanwhile, the Hang Seng in Hong Kong, well, that is in bear market territory, having fallen by 26% from its most recent peak and by 10.4% so far this week. Well, in Europe, stocks have traded largely to the downside today. Here's how they finished. You can see the CAC 40 in France was the biggest single faller there, off by just under 0.25%. Here in London, the FTSE 100 suffered its first reverse in 3 sessions. It finished down by 0.25%. The mining heavyweights Glencore, Rio Tinto and Anglo American were among the main drags on the index. The educational publisher Pearson was the leading gainer. That rose by 8% as the market awaits takeover developments. On Wall Street, meanwhile, well, the 3 main US stock indices, the S&P 500, the Dow Jones Industrial Average and the Nasdaq Composite, all enjoyed their first gains in 3 sessions. Airline stocks are among the leading gainers after executives of several carriers told an investor conference that they were expecting to see a faster expected recovery in demand. Well, joining me now from New York is Mickey Levy. He's Chief Economist for the Americas and Asia at Berenberg Capital Markets. Mickey, welcome to you. Looking at the S&P and the Nasdaq, I mean, they're very little changed since Putin launched his invasion. What does that tell us about how US equity investors view the war?
Well, uncertainty is just the only word that comes up, and just the heartbreaking the devastation to Ukraine is just dominating everybody, but it's uncertainty. And so today, oil prices were down big, and the markets went up, but who knows about tomorrow? Everything is dominated by the uncertainty. And what we don't know here is we know that this is going to add to inflation, which is going to have a big negative effect. What we don't know is the extent to which this is going to further aggravate global supply chains, disruptions to production and distribution. And while one can expect that the uncertainty is going to have probably a bigger impact or more pronounced impact on Europe, it's going to be felt in the U.S. There's no question.
Well, of course, all eyes are on the Federal Reserve. The Fed's meeting tomorrow. We're expecting the first interest rate hike since December 2018. You've actually written in the Wall Street Journal today that they should press ahead.
Well, that's right. And so the reason is, I mean, the backdrop is inflation's already risen way above where the Fed had been predicting. It's way above where it's comfortable. Labor markets are very tight. And when we think in economic terms, the Russian invasion of Ukraine operates like a negative supply shock. The Fed cannot do anything about it. But it does have to deal with the underlying very high inflation and very tight labor markets. And when we think about it, the federal funds futures has already built in expectations of about over six 25 basis point increases in the federal funds rate this year. And this is already reflected in say, 1 and 2 year Treasury note yields. So when the Fed actually starts hiking rates to rein in the underlying rate of inflation, it shouldn't have any impact on markets because it's already built in. It's already built into expectations, and it really shouldn't have any impact on the economy. And here I would note, when we look at the federal funds rate that's anchored to zero. At the same time, inflation has zoomed. The U.S. has never faced such a large negative gap between the funds rate and inflation in its history. And at the same time, the Fed's balance sheet is $9 trillion. The financial markets are awash with liquidity. So it's wise for the Fed to start to proceed to move toward a more neutral monetary policy, while keeping an eye on how global events, affect economic behavior.
I mean, Mickey, we learned today that US producer price inflation was above 10% last month for the second month running. I mean, it feels as though inflation, the GDP may already be out of the bottle.
Well, you're bringing out a great point. There, to me, at least, and many others, there's no question but that the Fed really read all of the inflation and monetary and fiscal policy signals wrong last year, and it should have started moving toward normalizing policies mid last year. And now it's really behind. And you're exactly right. When we look at agricultural commodity prices, which have been clearly aggravated by Russia's invasion of Ukraine, when we look at industrial metals prices and energy prices, there's no question but that producer costs are accelerating. And with the strong demand, at least in the US, businesses have that flexibility to raise prices. So once again, the Fed should be focusing on the underlying rate of inflation, and inflation is going to rise here further in the near term. And if you were to just look at the evening news in the United States or any local news, there are only two topics that absolutely dominate it. One is Ukraine, and the other is how high inflation is pinching on people's pocketbooks. That's the news, and the Fed has to begin addressing it.
Briefly, if you would, please, Mickey, how much concern are you picking up about anxieties over a trade war with China being reignited by what's going on in Ukraine?
It's definitely in the discussion. And so there are so many uncertainties, and I would note that, once again, while the U.S. does not have significant exports to China, it relies very heavily on imports from China. And, everybody can read the tea leaves, and clearly, China is, going to be supporting Russia and its initiatives in various ways. And China relies very heavily on Russia for natural gas. And there is this concern that that Russia's invasion of Ukraine escalates from here, and that's certainly a risk. And this is being and it should be reflected in global portfolio managers thinking about what might happen to asset prices, what might happen to the economies. And I think it's almost in the cards that global trade relative to global output is going to diminish some. And I would expect this is a important wake-up call, and you're going to see companies starting to reassess their supply chains as they should.
All right, Mickey, we've got to leave it there. Always good to talk to you. Thanks very much indeed for joining me tonight. Well, one of the most far-reaching consequences of the war has been a big increase in the price of many commodities, and in particular those produced by Russia and Ukraine. Copper and aluminium, two very important industrial metals, have traded at record prices since the invasion, while trading in nickel, a key component in electric vehicle batteries, was suspended on Tuesday last week by the London Metal Exchange after the price quadrupled in just 2 days. Well, the price of wheat, 30% of which globally came from Russia and Ukraine before the war, rose by 55% in the days after the invasion. The most dramatic impact, though, as far as consumers will be concerned, are in oil and gas prices. Well, Brent crude right now is currently trading at $98.49 a barrel. That's down by just under 8% on the day. But let me show you what's been going on with the price of Brent crude over the last month. As you can see, it peaked on Monday last week at nearly $140 a barrel. It's come rattling back since then, but there's a good deal of volatility in the market right now. Well, here you can see what's happened to the price of copper over the last month as well. A similar picture there. Copper at one point coming to hitting a new all-time high as well. Again, a very, very important metal in terms of what it means for the global economy. Well, earlier I spoke to Amrita Sen. She's chief oil analyst at the research consultancy Energy Aspects. And she told me a big factor behind the recent volatility is a lack of liquidity in energy markets.
Banks are being very, very cautious in lending to any participant that trades in Russian commodities, which, by the way, is enormous in terms of not just the volume Russia produces, but the intermediaries, the trading houses, oil majors. I mean, this is an enormous business when it comes to not just oil and gas, but across the commodity business. So there is genuinely a lack of liquidity in the market right now. If you look at margins, so all the exchanges, Intercontinental Exchange, for instance, has been raising margins for crude by 32% overnight last week. The same they've done for diesel as well. So people are having to put up more capital just to be able to maintain their positions, but also sometimes being forced to liquidate. And this is really the biggest paralysis I've seen since 2008 in the market.
I mean, on that basis, I mean, Brent crude is off some 30% from the peak that it hit just 8 days ago. Would you expect that volatility to continue?
Volatility, absolutely, yes. Do I think the correction is justified by fundamentals? No. Obviously, the price move higher was equally driven by the geopolitical risks around Russia. The reality is that we were expecting prices to go above $100 before the Russian crisis. We were expecting that to happen late this year into next year. We have been talking about genuinely running out of crude stocks in the summer because of what has been going on in terms just the sheer tightness in the market with the lack of supply and demand picking up. So nothing has changed. If anything, we are starting to lose Russian barrels. So the market is going to be tighter, but it's not going to be a straight line higher for prices. It's going to be immensely volatile.
I mean, on that basis, I mean, the received wisdom is that the UAE and Saudi Arabia are not going to be enough to compensate for lost Russian production. Is that actually your understanding of the situation?
Absolutely. You know, we've been talking about the lack of spare capacity for almost a year and a half now. And a lot of people were asking us questions that, are you guys sure? I think the market has come around to our view. Yes, Saudi Arabia and UAE have spare capacity over and above the current OPEC deal. They could increase production. But again, even if they brought everything forward, it's not going to be enough to compensate for, say, let's say 3 million barrels per day of Russian production that could be at risk in April. But also, I think Saudi Arabia knows very well that should it bring all the production capacity it has up front, what happens this summer when seasonally demand picks up? So this is what they're trying to juggle right now and really keep the market as stable as possible.
Do you have any optimism that Iranian crude is going to return to the market anytime soon?
It's complicated now with Russia's involvement. There's been some movement today with Russia saying that, yes, it's received some U.S. guarantees that it can continue to trade with Iran after the deal. But no, by no means is it a done deal. We've had obstacles before, but of course, Russia getting itself involved vis-a-vis what's going on in Ukraine does definitely throw a spanner in the works. We are still expecting a deal to be done over the second quarter of this year, with barrels starting to hit the market in the third quarter. But right now, that's definitely not as certain as it was even, let's say, 10 days ago.
Now, the market does appear to have been self-sanctioning or Russian oil and gas, but that crude is still finding its way to Asia, isn't it?
Not as much as one would expect. Yes, India bought a few cargoes. The ESPO pipeline that goes to China and the ESPO barrels, cargoes that go to Japan and Korea, that is flowing. That's another grade, not Urals. That's going to Asia. China is still buying it. But when it comes to Urals, that is not going in the same volume to Asia as many people had expected. It's not that China and India don't want to take it. They are just trying to sort out payment issues, because the banking sanctions and the SWIFT sanctions have made it very difficult for payment. And I think that's what the main issue is right now. And yes, remember, right now, a lot of the cargoes that are loading are cargoes that had been booked pre-sanction. So they will still flow even to Europe this month. The real hit to loadings will only come from April. So I think there's a little bit of a misconception around this. It's just that the Asian barrels that you're seeing being loaded today, they were bought pre-war. It's the new barrels that need to be loaded from April. That's where you're going to see the real issues, and which will force Russia to shut in some production.
Now, the World Bank has announced an extra $200 million of funding for Ukraine on top of the $723 million it had already promised. Well, the initial loans are designed to support critical services in Ukraine, including wages for hospital workers, pensions for the elderly and social programmes for the vulnerable. But what will be needed in the longer term in the country? Well, joining me now from Vienna is Axel von Trotzenberg, the World Bank's Managing Director of Operations. Very good evening to you, sir. I mean, this $200 million is part of a $3 billion overall package that the World Bank has announced. When do you expect all of that to be dispersed?
Well, we have been dispersing very quickly. We had last week a discussion at our board that was approved, and $500 million have been dispersed. So we are moving very fast. We have announced that up to $3 billion of support can be expected from the World Bank. So we have now, again, under $90 million, and we are preparing 2 operations of $500 million each.
Now, we heard earlier in the programme calls for a Marshall Plan to help reconstruct Ukraine after the war, whenever that may be. Is that something that the World Bank could do on its own, or is that going to require a much bigger multinational effort?
Well, you're right. This will need to require a worldwide effort to support Ukraine in its reconstruction. But as you know, the World Bank was created after the Second World War. We have in our original name the Reconstruction, the International Bank for Reconstruction and Development. Reconstruction will be very, very important. The World Bank is ready. We have huge experience in this, and we stand ready to support Ukraine in all its efforts in the reconstruction. At this stage, of course, we will need to continue to support them to get through this crisis, and hopefully that peace will come soon.
Is there any kind of number that you could possibly come up with to say how much post-war reconstruction of Ukraine might cost?
I think it is very difficult because, as you see, the longer the work lasts, the more the damage is and the more financial needs will be required. So I think it is premature to speculate. What is very clear is that Ukraine will require an enormous amount of support, and that is for the reconstruction. We will also not need to forget that the fallout of this war is also felt in many developing countries. You were just talking about the impact of energy prices as well as on agriculture prices, and this hits particularly poor countries. So we will see a much, much bigger global effect, particularly on the developing world, which will also require billions of dollars of financial support.
Now, obviously, the international sanctions are also hurting Russia a great deal. If Vladimir Putin was to turn around tomorrow and sue for peace and give back the land that he's taken, how would the World Bank look upon an appeal from him for help?
Well, this is governed by our board. I think our first focus, and certainly our board, is focused single-mindedly on Ukraine to support it against this invasion. And this is the main focus. So I don't think that the board or anybody else has been focusing on a speculative idea of supporting Russia right now. I think we will need to focus first to help Ukraine, its reconstruction efforts, and then see how the international community will react to Russia's actions.
I mean, Russia faces two interest payments tomorrow on dollar-denominated bonds that it's gone in issue. Do you fear the consequences if Russia defaults on those payments?
I think this was anticipated with the sanctions. I think what is very much more important is that there is international solidarity with Ukraine, and therefore you see that many countries have taken very serious sanctions vis-a-vis Russia, and I think that is anticipated that there will be defaults. But the most important thing is let's keep in mind that Ukraine is under attack.
And just to go back to something that we discussed at the very beginning, the amount of money that you've given and are giving to Ukraine, are those grants or just loans?
These are loans, and we have received some support from about six countries for about $140 million, including a generous grant by the UK government of about £100 million.
All right, Axel von Trotzenberg, good to talk to you this evening. Thank you.
Thank you very much.
Well, to some other of today's developments now. And the UK and the EU today imposed bans on the export of luxury goods and vehicles, art, jewellery and high-end fashion to Russia in the latest push to isolate the country. The UK is also slapping 35% tariffs on a range of Russian products sold in its country, including Russian vodka, metals, fertilisers and other commodities. Meanwhile, the EU has introduced an import ban on Russian steel and steel products that are estimated to cover some €3.3 billion worth of products. Separately, the UK today announced that it was freezing the assets of 300 more Russians, including 50 oligarchs and members of their families. Those covered by the new restrictions include Mikhail Friedman and Peter Avon, whose Letter One investment company owns the health food retailer Holland & Barrett. Meanwhile, the EU has added new names to its list of Russians who've been made subject to an asset freeze and travel ban. They include Roman Abramovich, the owner of Chelsea Football Club, who was first sanctioned by the UK on Thursday last week. And Russia claimed tonight it had received guarantees from the United States that sanctions imposed on Moscow will not be allowed to affect its trade with Iran. Well, the guarantee, if true, would remove a stumbling block to Iran reviving a 2015 deal with the West, under which the Islamic Republic would rein back its nuclear programme in return for an easing of Western sanctions. Well, that in turn could see more Iranian crude oil being released onto global markets. Signatories to the original 2015 deal, apart from the United States, included Germany, France, the UK, Russia and China. Now, forecasting global growth is not easy at the moment, with the war in Ukraine being so unpredictable. Well, joining me now is Aaron Captain. He's chief economist at UBS. Aaron, very good to see you today. You've published a range of scenarios, the most downbeat one of which is a recession in Europe. How do we get to that state of affairs?
To get to recession, you would need physical disruption to energy supplies. So it's not enough to just have a price shock. You would need to see some disruption. So what we assumed in our scenarios is a 50% cut in oil and gas supply from Russia to Europe. That equates to about 8% of all European energy consumption. And then you'd have a bunch of offsets where Europe would be able to substitute some of that energy supply, but you still end up with about a 400 basis point decline in growth in Europe relative to the pre-invasion baseline.
But on your base case, you've just cut your global growth forecast from 4.6 to 3.6%. That might not strike two people as being too apocalyptic.
Yeah, so all that's in there at this stage is just the move in commodity prices since the invasion. And so rough rule of thumb is every $10 on oil takes about a tenth off of growth. As you showed on your chart, we've had oil moving in. I mean, intraday it actually reached about 140. So it's been sort of in a that range alone is worth about 50 basis points of global growth effectively. And so what we've done is two things. So one is we've taken on board the inflation hit to global consumers. So there's an erosion of real disposable income. But then the other thing you need to take on board is that there's going to be some supply chain disruption. We're tracking satellite data of the number of ships going to Russia. That has completely collapsed. So that's down by 50% in just the last couple of weeks. So there's going to be some trade disruption. And then we're already getting reports from auto producers, for instance, of supply shortages of particular parts that are being manufactured in Ukraine. So, for instance, wire harnesses is a part for cars that are already being disrupted. And so, taking it all together, about 60% of that downward revision was sort of the rest of the world, but the other bit's Russia. Right. So Russia, I mean, you were showing, I think, a number from the IMF for Ukraine on the screen. All these things are guesses right now. But Russia, we think, is going to contract in the baseline already by about 10% this year. And so that is 40% of the downward revision in global growth.
Now, one of the key weapons that the West has utilised against Russia is restricting its ability to trade in US dollars. Does that potentially force Russia to use other currencies? And which ones does it go for? Presumably it's the renminbi.
Well, so far it's quite partial. So they, the SWIFT exclusions do not apply to the entire banking system. So at this stage, it is still possible to transact with Russian bank. They've actually, some of the banks through which normally the West conducts their energy business with Russia are still not on that SWIFT list. So at this stage, that may still happen. It may be that the West is effectively sort of giving their own banks some more time to lay the groundwork for a more broad-based exclusion from SWIFT, which would then really make it difficult. But yeah, they don't have a lot of options. So because aside from China, so all the other currencies in the G7, the usable currencies, are all going to be subject to those constraints. And so the question is indeed, can they use renminbi, and are other countries willing to transact in that? And I think that remains to be seen.
I mean, Dow Jones has reported this evening that Saudi Arabia may price some of its oil sales to China in renminbi. Does that in any way chip away at the dollar's supremacy globally?
So, look, so ultimately, I think the sanctions that have been imposed, including the freeze of the central bank's reserves, all those are things that are going to undermine a little bit the confidence in, I mean, not just the dollar, but sort of the safety of effectively, G7 currencies in terms of having your money invested in them and to go through their financial system. So, I mean, for some regimes, there will be some diversification, I think, on the back of this, where this is pretty unprecedented, the restrictions that have been imposed. And so there's going to be a global rethink, I think, on the part of some governments as to how dependent they want to be on the dollar financial banking system.
All right, Aaron Captain, good to talk to you this evening. Thanks very much indeed. Well, still to come here on Ian King Live. The British-based company concerned for its workers in the city of Dnipro as Ukraine's manufacturing facilities come under attack. Don't go away. Welcome back. Now, many companies with facilities in Ukraine are worried about what will happen to their workers there. Well, today, the British rocket company Skyroar announced a new engine testing facility in Scotland. Ukraine has a strong history in the space sector, and Skyroar was founded by a Ukrainian and has a research and development team in Dnipro. Well, joining me now is Skyroar's chief executive, Vladimir Levikin. Vladimir, very good evening to you. First of all, how are your people in Dnipro?
So far, reasonably all right. So the Dnipro so far just experienced a few missile strike in comparison with Mariupol. It's nothing basically. So, and our people are safe at the moment. Thank you.
Are you trying to get any of them and their families out of the country?
Yes, some of them, whenever it is possible. Please mind that the male cannot leave the country unless they are, let's say, either very young or very old, or they have 3 kids. So basically remove the people who has more than 3 kids. And we also have some people who basically stuck at the beginning of the war. They appeared to be here in the UK in a business trip. So our primary goal was basically to take care about their families and assist as much as we can and support them as much as we can from here.
Now, you're aiming to be the first British company to launch an orbital launch from UK soil. Has the war put any of that in jeopardy? Has it pushed your plans off course?
Yeah, no, even though that our main everything facility, manufacturing facility, engine test that you mentioned here in Edinburgh and Glasgow area, however, of course, the war in Europe will have an impact on everyone, including us, of course. And we're now trying to assess what the impact would be and how to regroup and how to optimize the process and to minimize the impact on our operations.
Now, Ukraine has a very, very proud and strong tradition in space, in the space sector. How did that come about? What were the origins?
So the Dnipro, basically the city which we are based on in Ukraine, it used to be the space hub of the Soviet Union, right? More than 10,000 rockets, missiles, ICBMs been built there, right? Including the latest achievement, Zenit rocket, which Elon Musk once named as the 2nd best rocket in the world right now. So, which is right place to be in for us, right? And it seems to be that it's one of the assets which is Russia desired to capture. And obviously the Dnipro is protected well, and I believe that will never happen and we will win.
And of course, the world's biggest aircraft, the Antonov, was designed and built by Ukrainians.
Yeah, exactly. In Kiev and Antonov, and as you know, it's been unfortunately destroyed during the first date, which is absolutely let's say, disaster, as any other disasters which Russia caused in Ukraine, but that one particular, will have an impact on aerospace industry because that was widely used to transport large satellites across the globe, and whenever it was such unique plane is needed, it was always on duty, but it's gone now and it's gone forever.
That is heartbreaking. What do you think Putin is up to in terms of the space industry specifically? Do you think he is trying to get his hands on some of the technology that exists in Ukraine?
Oh, okay. So I think nobody is capable to comment what this Mr. Putin does, right? I think that the techniques which they use right now, which is basically flattering the cities, will destroy all kind of IPs and assets, which they just did with Antonov, right? So I think that his desire is completely different. He's not rational, and he's not thinking about how to get technology from Ukraine. He's thinking about how to destroy Ukraine as a country and as a nation, my personal opinion.
This must be a very, very difficult time for you personally.
I mean, the number of millions of people who has a way worse situation than myself personally, because I'm based here in Edinburgh, and you know, all what you need to care about, it's basically not my personal life and my personal family, but people in our company, which I try to do all my best to take care of them. But believe me, there are millions of people who really in a terrible conditions right now in Ukraine.
Well, Vladimir, we wish you all the very best. Thank you very much indeed for joining me this evening. Thank you.
Thank you very much. Thank you.
Well, before the war, there were some 32,000 people born in the Ukraine living in the UK, many of them working in the tech sector. Well, one of them is Ira Arielaki, who joined us earlier in the year to talk about her company, Zamna, whose technology helps airlines and travel authorities securely share and verify passenger identities. But she stepped back from that to set up Sunflower, an organisation trying to get aid into Ukraine. Well, Ira joins me now. Ira, very good to see you this evening. First of all, I know you have family in Ukraine. Are they all safe?
As safe as they can be, given that now nowhere in Ukraine is safe. From Sunday, Western Ukraine has seen shelling and bombing. And actually, overnight, I started helping to evacuate part of my family, which is just not straightforward given the situation.
So tell me about Sunflower. What are you specifically looking to achieve?
So Sunflower Relief is connecting immediate needs on the ground in Ukraine to aid that is looking for a way in fast. As you mentioned, I was born in the Ukraine, Ian, and I left when I was 9. But Sunflower Relief is unique because even though we're in the UK, we, myself and my team, speak all 3 languages that are local to the borders, Polish, Russian and Ukrainian. And we're fast creating this network and building meaningful relationships to both source and verify high integrity organizations or individuals who are already serving the local community on the ground.
So what have the main challenges been in getting things across the border?
I mean, the logistical challenge of Sunflower is scaling people and process, which as a founder and CEO of a tech company, Zamna, I'm very used to doing. One of the biggest issues we have is that we're seeing lots of brilliant aid efforts happening. And there's such complexity that so many organizations need to come together to form links in that chain, from aid being donated to aid going on the ground to the end receiver fast. And they're struggling to get it deep enough into the country sometimes, because Ukraine is largely rural and very difficult to actually navigate. So, for example, we have a donor in the US right now who has donated funds through an NGO to buy some supplies for a network of orphanages in Ukraine that we've established connections with. They can't wait. They need this aid fast. And that's what we're delivering today and trying to overcome those challenges with the one advantage that we do have, which is our linguistic barrier that we can overcome and our deep and personal connected network on the ground.
And I gather the fact that you've worked closely with the aviation industry with Zamna, that has been a big help for you as well.
It's been extraordinary, the response I've seen at very senior levels, from aviation executives willing to donate cargo space, cargo capacity going into particular ports, airline hangars to store this aid, even seats that you would have seen many companies donate to get people out of the difficult conflict zone. So I think the response has been overwhelming, and helping the people that I know and want to help in the Ukraine has definitely been helped by the fact that I've built a strong network and also friendships as CEO at Zamna working with airlines.
Now, obviously, you've built your life in this country, you've built a business in this country. Are you perhaps casting your mind ahead a few years down the line in terms of how you might help out in a sort of reconstruction drive for Ukraine?
Absolutely, and there are 2 very distinct phases as my aid workers are educating me about this. The initial immediate fast relief on the ground is just phase 1. Phase 2 very much is developmental aid. And this is why building meaningful and deep networks will help us make inroads and create that infrastructure that until 2 weeks ago, we didn't really need to build for aid to continuously come in and help Ukraine recover from this.
There are a lot of people watching will be wondering how they can help out. What should anyone do if they're interested?
I'll say 3 things. The first one is that if you're a business looking to put together aid packages, we can connect you to high integrity, vetted and trusted connections on the ground directly. The second one is if you're an institution and you're looking to donate funds, do consider us and help us scale very fast. And finally, and most importantly, if you're a Ukrainian-speaking individual who wants to volunteer and support our efforts, please do get in touch with us.
All right, Ira. Well, best of luck with everything you're doing, and also, very importantly, best of luck to all of your family. I hope they stay safe. Thanks for joining me.
Thank you, Ian.
Well, still to come here on Ian King Live. What next for the global economy as the war in Ukraine threatens to stop the pandemic recovery in its tracks? Don't go away.
They have breached the road. There is a lot of gas being fired all around us. It is an absolute carnival kind of atmosphere out here for Prime Minister Modi's decisive victory. These students are defying the prohibitory orders, and now they're going to be arrested.
We aim to be the best and most trusted place for news. The roads have been inundated. The only way out is to get people by boat. This on any given day would have been bustling with people, but today it's absolutely deserted. I'm Neville Lazarus, and I'm Sky's reporter based in Delhi.
ba ma dalee commencé liggéey bi yokkute bu bari am nañ ko ci.
Welcome back. Well, over the last hour, we've been looking at the damage that's been done to the global economy since Vladimir Putin decided to invade Ukraine. The big question now is what will happen next and how might the balance of economic power change in coming months? Well, joining me now is Peter Oppenheimer. He's Chief Global Equity Strategist at Goldman Sachs. Peter, welcome to you. At the beginning of the year, it was all about inflation, reflation. Now the buzz is all around stagflation. Are we heading in that direction?
Hello, Ian. I think we are. First of all, of course, my thoughts are with all the people affected by this awful humanitarian disaster. But as you say, there are economic effects as well. Towards the end of last year, markets were very much focused on rising inflation, but strong economic growth alongside that. And as a result of those things, rising interest rates, particularly in the US. But now the effect of this war has been to push up inflation expectations even further because of surging commodity prices, but that's also hitting growth expectations. And that combination is often described as stagflationary. It's the worst of both worlds in a sense, because you have rising interest rates and higher inflation, but weaker growth. We don't think there'll be recessions, but across Europe, which is most affected by the rising commodity prices, we will see likely a period of at least stagnation and maybe a quarter or two of negative growth as well.
Peter, we don't want to send people off to bed with nightmares. I mean, when you talk about stagflation, we're not necessarily talking about something akin to the 70s oil shock.
No, I think that's right. A lot of the energy price surges that we're seeing will start to fade out over time. And it's important to understand that we're starting from a point of extraordinarily low inflation that we've really enjoyed over the last decade or more. And of course, very low interest rates. Most countries have interest rates close to zero. So even as we see gradually rising interest rates to offset the effects of these rising prices, we're still talking about very low levels relative to history. And at the same time, we're seeing much more government support coming through in the UK and across Europe in terms of fiscal policy. And private sector balance sheets are quite strong. So that at least is a positive offset in the light of this shock that we're seeing at the moment.
Obviously, there was a lot of hope at the beginning of this year that 2022 would be a year in which business investment took off, that there'd be an increase in capex around the world. With all this uncertainty, that feels rather unlikely.
Well, of course, when you get a shock of this nature, and it is really very shocking, it does dent optimism and confidence, at least in the short term. But I would say that at the same time, the moves towards decarbonisation and the urgency now that this is facing, given the requirements to become more energy independent, particularly across Europe, is going to result in a lot more spending, I think, a lot more capex, infrastructure spending on alternative energy, on renewables, and also on defence. And this will, over time, create more opportunities for growth. And I think we will see a big pickup in investment spending relative to what people were expecting perhaps a few months ago. And also, we are still seeing, as you said, the beginnings of the opening up of some of the service parts of the economy as we hopefully come out of the pandemic.
Peter, you mentioned defence spending there in particular. I mean, the important thing about the defence sector is that there's quite a big multiplier effect, isn't there? A pound spent on defence goes a lot further in terms of boosting growth elsewhere in the economy.
It does, and also historically, it's had quite positive effects on other technologies and on creating jobs. We do have quite a strong job market. Labour market is quite tight here in the US and across Europe. So the increase in spending on that area and indeed on other infrastructure related to energy development, I think will be a positive over the longer run. And of course, we were already seeing, partly as a result of the pandemic, many companies bringing back operations and production to more local sites across Europe, the UK and elsewhere. And that will create more job opportunities and growth opportunities as well.
Peter, got to leave it there. Thanks for joining me tonight. Much appreciated. Up next, the news at 10. Don't go away.
I love my job because I get to do something that is contributing to a better future.